Good afternoon, everyone. Today is Monday, the 11th of June, 2011. Let's take a look at these markets here today. This is being brought to you by Realtic. Realtic is the trading platform that I use and the analysis tool we're looking at right now. So do take a look at realtic.com. They're the reason this is on YouTube. And the market started out with some so-called bullish news regarding Spain this morning, so the market's gapped higher. And we'll take a look at the two-day chart. You can see that it gapped up pretty close to daily R2 here. And then right away, sellers came in, and it was below the volume weighted average price for the entire session. And the rate of, the slope of that volume weighted average price was lower all day as well. So sellers clearly were in control for the entire session here. We had that gap up, and of course, it failed right at this prior important level near 134. I was kind of thinking that maybe 132-ish would hold as a little bit of support in here this afternoon, as that's been a larger area where we've seen some volume change hairs. So share volume change hands, but of course it didn't hold. We're right down to the 5-day moving average, and this is going to be, I think, an important level tomorrow, right about 131.10. So if we take a look at the volume weighted average price since the event, that is this gap lower a week and a half ago, it's just down below at about 130.50 right now. And it's really, the market, we have mixed messages on different time frames. We've been talking about the 5-day moving average and that it's been rising, and we always want to ask, where has it come from? Where does it have the potential to go? Well, this market has just come from 127 up to, prior to today, that is, it had closed at 133-ish. And then today, where did it have the potential to go before it's likely to encounter resistance? And that's basically right here at this level. Well, now we made it up through there briefly, but with a declining 50-day moving average, we're still guilty till proven innocent on the daily time frame, whereas we generally trust the rallies with a rising 5-day moving average on the intermediate term. However, you can't chase an extended market, and that's the difference here. So it gets confusing when we have these different messages from various time frames, but always ask yourself again, where has it come from? Where does it have the potential to go before it's likely to encounter resistance? And after a move from 127 to 134, the odds just don't favor new purchases up there. So hopefully that wasn't something that you had gotten involved in here today. We do have still a declining 50-day moving average. It's right up near that 100-day moving average at about 136, and it doesn't look like that's going to be tested here near term. But basically our bigger band of resistance is likely to be this 134 to 135 level. That's going to be an important level to watch, and it seems as though maybe 131 should offer a little bit of support tomorrow. If it doesn't offer that support, then I think you could look at the potential that we head back down towards 130 and then close this gap, and at that point perhaps resume the downtrend. So it's really still very tricky in here, and you've got to take it on a short-term trading basis, and be aware that moves are going to be choppy and just a few days at a time. The Nasdaq also came up to some prior support in here at about this 63.5. So 63 to 63.5 is our band of resistance, the important level for the Nasdaq. And we can see here that when we back it up a little bit to the 65-minute time frame, that becomes a little bit more clear here. This 63.5 was prior support, and we've seen the resistance recently at 63. So we had a quick little move above that, and from that failed move we see a fast move now. This level down in here near about 61.5 has been important recently. We'll see if it can offer some support here the next couple days, really down to 61.20. But with a declining 50-day and a declining 20-day moving average, I wouldn't be expecting too much from the long side here. Still, we need to settle down and at least have more of a time correction before this market is capable of turning back around. We need to see that 50-day moving average kind of flatten out and then begin to turn higher, and it's just going to take some time before that occurs. The Russell 2000 fell short just of its prior important resistance level, just at about this $78 area. Today's high 77.86. You can basically say it was tested, but that 78 had been important support earlier in this year, turning into resistance a couple times. We could say it basically was hit again, and we've we've got a strong rejection with that big red candle there today. Here we can see on the intraday time frame that it's a little bit more obvious. We got a test of the 78 level last week, quick sell-off, and now we had a test of it again, an even stronger sell-off with the Russell 2000. So when they gap up, you want to give them the opportunity to maybe settle in and then get above the volume weighted average price, and then something like this. So had the volume weighted action been like this, then we would want to be a buyer right here with a stop below the low of the day. That's what could have happened. That would have been a more bullish scenario. Obviously, that didn't occur. We were making lower highs and lower lows all day as this market was below the declining volume weighted average price. So there's no reason to step in here and try to be a hero and buy this thing. Let's see if 75 holds tomorrow. And I would say 74.80 to 75 really is what we would want to be looking for. And breaking that, then here's we're down to 74.50 is what was the basis of that prior turnaround, where it seemed as though maybe the buyers were going to regain control. But still, declining moving averages all over the place. We didn't have a higher high, so we still have lower highs in all these markets. You look at the Nasdaq, we have a lower high. This S&P still have that lower high. I mean, we beat it by a penny or two. And I think I warned last week that don't be a buyer. Don't think that just because it might break above one number for a few moments that's the higher high that's going to be bought. We want to see a pattern of higher highs and higher lows and buy after these little consolidations. And if you were to buy today, the only time it would have made sense is maybe when and if it got back above the volume weighted average price and it started to turn higher like this. But that obviously didn't occur. Instead, we had a continued sell-off right into the close here. The semiconductors were down 52 cents. An important level here is at about $30.80. And then down at $30.50. We still have the possibility in these markets of an inverted head and shoulder pattern, but it looks like we're going to trace out multiple right shoulders if that does occur. The financials did get above that 1425 level, but again, you got to be pretty foolish, I think, to be chasing on these gaps higher, buying these breakouts. If you're looking to buy the breakout, you don't buy as it gaps higher, but instead you wait for it to prove itself. You let the action kind of do this type of thing, then rally up a little bit, and then the volume weighted average price comes with it, and then you want to buy right in here as it's starting to break, or right here where it creates that higher high above a rising volume weighted average price, with then a stop below the low of the day. Well, that obviously didn't occur. So that's how you could have looked to purchase, but that's not what the market in fact gave us. The market said, sellers pretty much all day long. 1370 to 1370 to 1380 will likely be tested, and we'll see if that holds as support. But right now, with the declining moving averages on all these time frames, it doesn't look like it will hold as resistance. Apple found resistance. It was up through that 50-day moving average, but the 50-day moving average is declining. So I think Apple still needs at least more time to consolidate in here. The names that I had mentioned last Thursday before the Traders Expo included Abercrombie and Fitch as a potential short sale candidate. Now, it gapped down on Friday, which didn't make it a good candidate. Today, it could have been a better candidate. You can see here the 2-day volume weighted average price was broken. And then, if you're in this one, I'd say the worst case stop would probably be about 32.10 or break even right around in there. But Abercrombie still looks like it's probably headed for about $30 a share. So I still like the way that one is set up as a short. AWAY was a potential short sale candidate as well. And this one kind of you could have shorted this one on Friday, and I don't think you would have been stopped out. So if you're still in it, I'd say your worst case stop is just above today's high. I would look for this thing to head down closer to 21 and perhaps even all the way down towards the lows from last year at $20 a share. So it still seems to me as though AWAY is a good short sale candidate. Unisys was the other short sale candidate, and this one, it was weak from the open on Friday. We were looking for hopefully a little bit of a rally and then break down. So I'm not involved in this one. Here's the 2-day volume weighted average price. We're below it. Maybe tomorrow you could get it near about 1505 with a, that is, if it rallied up to 1505 and then to short it back down through 1490 would be a way to go. But I don't think you should have a position in it right now. I do still think it looks like there's more weakness ahead, so continue to keep an eye on that one. CIGX finally gave us a reason to buy here today, getting above that 395-ish level. If you're involved in it, I'd say the worst case stop probably about 385. But just given the lack of overall trust in this market, I would say you might even have taken some off into some strength today. I did, and anyways, 385-ish would be a stop in there. And I won't be updating these stocks again, by the way, unless you're a subscriber. The subscribers know when I update them, but Nuvasiv, I had mentioned to subscribers today that did give us a reason to buy on Friday, and that basically if it got below Friday midday low, that would be the time to take it off. So I still think that Nuvasiv has a constructive looking pattern, but it might need a little bit more consolidation in here. We had also mentioned Verizon, and that was something I had shown you on the webcast that I had purchased at 31.92, I believe, or something like that. Anyways, if you're still involved in Verizon, here's the 2-day volume weighted average price. So since this upward move really began, I'd say your stop should go about $42.45.